Now, here's the next one. This is the big one. The biggest misconception out there regarding life insurance. And Primerica has done a great job of promoting a myth as fact. And the biggest thing that they say is you only get either the death benefit or the cash value at death. Okay? That is so wrong. You have no idea how wrong that really is. So, what is the truth? I'm going to give you the formula, then I'm going to illustrate it. The formula is net death benefit equals cash values plus net amount at risk minus any outstanding loans. So there's a little bit of a formula in there, isn't there? You thought you didn't need algebra after high school. Turns out you were wrong. We've got to figure out what these values mean. So let's have a little fun here. We're going to put in a box. And we're going to assume a minimum premium for a maximum death benefit for whole life insurance, okay? Which means the premiums start from 0, and we're going to keep growing them till we fill the box, okay? Well, I want you to think of this part as the cash values. This is the death benefit. This here is the net amount at risk. Now, you could also have a loan. Let's just say you had a loan over here. Okay. If you were to die here, 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 or here, this plus this minus this, that's what you're going to get. The cash value is a component of the death benefit. It is not either or. It's within the death benefit. Think of it like your house. If you bought a house, you're building up some equity, although your equity doesn't earn anything, but you're building up some equity as you're paying down the mortgage. When you sell your house, you don't get the equity on top of the sale price of the house. You get the sale price of the house. You happen to have your equity incorporated into that total calculation. It's the same thing with life insurance. Now, why does that myth perpetuate? I'll tell you exactly why. That myth is perpetuated because when you look at a life insurance illustration, how many columns of numbers are there? You could have 10 columns or more, however many columns of numbers there are, none of them say for a net amount at risk. None of them have that. So you think, oh, well, you're going to get this number or you get this other smaller number. And so it's easy to believe that because that column isn't there, that, oh, well, they keep that money and then you get this money. No, insurance companies don't print money. That's the federal government's job, and we can see that they've done a great job of that this past year. No, this is part of the reserve, and the reserve is incorporated into the death benefit, which is also pooled with everybody else that has bought insurance. So that is the number one thing that they said, well, you only get one or the other. Had someone on one of the discussion groups talk about one of the books that they love within the Primerica, probably Dave Ramsey Culture too. And they say, well, I looked at the reviews. I wasn't going to buy the book if it was going to perpetuate this myth. And all the reviews said, yeah, you only get one or the other. Wrong. You get both, but it's incorporated in the calculation.